Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for March 14th, 2022. We are recording this at 1 p.m. Eastern Time, and this is episode number 335. My name is David Kosmeter. I'm the creator of TimingResearch.com, and today I have arranged for Leslie Jouflas of Trading Live Online to join us, and you should be seeing her screen right now. And Jim, the option professor, is back to moderate. So I'm going to go ahead and turn it over to him.
Okay, thanks, David, and welcome everybody. Monday morning, quite a bit going on. We were higher early, and it looks like we've lost about 300 points on the on the Dow, and about 300 on the NASDAQ from the highs today. So there's definitely some activity going on today, and we've got a big week ahead with the Fed, and we've got triple witching at the end of the week. So there's going to be a lot going on this week, and we're going to look at some of the charts and find out what's going on. Before we get started, Leslie, Trading Live Online, give us a little background on yourself and what's going on at your company.
Well, thank you. Thanks for inviting me back. This is always a fun segment to do. And I'm Leslie Jouflas. Trading Live Online is my website. That website was started in 2007 for the full only purpose of educating traders. But I've been trading. I started in trading in the mid 1990s, and I use a pattern recognition, which maybe on my charts I can show you a little bit of. I'm a chartered market technician as well, so I do combine some kind of classic technical analysis with the patterns that I use. And I think today is going to be a really fun segment to do because there's lots of things going on in the markets right now.
Okay, great. And like I say, I've been looking at things as well regarding options with the VIX, and I'll share that with us as we go on. But on Monday morning, we always put the tough question out there for everybody to get their crystal ball out and give us an idea of what the future holds. So let's start with our standard question, which is the S&P opened today at 4202. Where do you think it'll be on Friday? Up, down, sideways, and what is your confidence level?
We've got the Fed meeting this week, if I'm correct on the dates on that. But if we get below this 4,100 on the S&P, then down. My bias is leaning more to down than up right now.
Okay, and your confidence level is what percentage?
Well, I'm going to give it about 75%.
Okay,
so always room for error.
You feel you feel pretty much as we see it now. That's the way it's going to go. What fundamental or technical things are you looking at? Briefly, we'll get into more detail later, but what's some of the things you're looking at that are going to move the needle this week?
I don't use fundamentals in my trading. Right. I'm pure technical analysis, and so this chart of the SPX that I've got up, I believe we're looking at kind of an irregular head and shoulders pattern here, and right over here. In fact, I'll just actually mark it in so everybody can kind of see it with my eyes. And I've got some trend lines drawn in with this. I believe this head and shoulder pattern has a downward sloping trend line, and on the SPX, it's just sitting right on this trend line. I think a close below the 4,200 level and staying below that 4,200 level triggers this head and shoulders pattern. And I have a projection of just a simple projection using the height of the pattern and projecting it down. And that's bringing it down to about the 50% retracement from the March 2020 lows up to the all-time highs. So that's what I'm looking at on the SPX. And of course, on the futures, the price level is similar. Just a little bit different on the price because it's the futures.
Okay. All right. Well, right now, like I say, let's start taking a look at the S&P and get some ideas of what you think might be happening here. Because again, we are slipping a bit, and is there some
Well,
levels here? Let's just say on the upside and downside. In other
okay.
words, like we are, at a pretty high VIX. We are at a pretty low price from where it's been, and we have news that could, like in other words, the Fed statement might get people more calm or something like that. So let's look at the downside potential if things were to unravel further, and then what would be a signal that some type of a sharp rally could be starting.
Well, I think I'm putting on a little bit smaller time frame using the S&P futures right now, so we can see some of these price levels a little bit more in detail. But today, the S&P on the intraday got up to about that 4240, and we've been coming down from that level now. So that 4240, 4250 area right here, I'm going to draw just a little line right across it there. This is the first level of resistance that the market has to get through and close above before it can get move higher. And the next point is going to be right around this 4,300 area right here. So those are the main resistance areas that I'm watching right now. And right now they're giving short opportunities, as they come up and test these areas. Globex tested, we moved down off of the open, we moved back up, tested it again, and been coming down. So on the downside here, we've got this 4150 area. Let me just borrow one of these lines here to make it a little bit easy. But right here, I think if 4150 breaks, we're going to go through that this 4140-ish area. And again, that 4100 level, that was the level that the market right here found this strong support and this strong rally from. So a break of this, and I believe that head and shoulder pattern that I showed you is going to be in progress. And then I'm going to be looking for some of those fib retracements to the downside. Interesting is that the NASDAQ, if you don't mind if I pull that chart up real quick, the NASDAQ on a daily chart using the March 2020 lows up to the highs here, had this range break to the downside. The NASDAQ has already made it to a 382 retracement, whereas the other indexes haven't even come close to this. So I think if the NASDAQ continues to the downside, it's going to be pulling the other indexes with it. The S&P seems to be following the NASDAQ a little more closely than the Dow, but I think that's because of some rotation going into some of the defensive stocks.
Okay, I'd like to talk a little bit now about one of the most important things I think that has happened today, of many things that are important today. Let's put up the chart on Apple, because there is a ongoing feeling that until they break Apple down, to a good size correction, 140, 130 or something like that, and we get that VIX way above 40, and we get the put to call ratio yelling panic, and the advanced decline line lining panic, we're not going to have a real low set in. So today, Foxconn announced that they are halting production of the iPhone. Now, that because they're having the COVID crisis over there again. And that's got to be the kind of news that could set something going here. And like today, we've already gone from like a high of 154, 155, and we're at around, what are we at, 150 or something?
Yeah.
And once it broke about 160, wasn't that the beginning of maybe what could be happening here?
Yeah, well, I'll walk you through the chart that I've been following on Apple. You can see all these different kinds of patterns and lines and trend lines and things on here. This is one I've been following. So this dash line here, this is sort of the center line of the upper trend line, and the lower trend line, it's been an upward trending parallel channel, had a breakout here back in December, but back into this area. It retested. These center areas of parallel channels are important to watch because if you look back here, you can see how price held that center, it became resistance and held it, and then wasn't quite sure, came back, tested it. And now we can see that there is a break below that. However, I do with this lower trend line is coming in right around that 140 area.
Mhm.
This is with this little lightning bolt shape here. This is called an ABCD pattern. This is actually a buy pattern, but we have a gap right here from Friday's close to today's open, coming down to this 148 area. So I'm thinking that because there might be more selling pressure, we might see Apple get closer to this 140, 42-ish area here. It creates a low risk trading opportunity because of this longer term trend line to do a buy on Apple and be able to place a stop, below it. Here, this number down here, this 1618, this line from here to here and here to here equal 1.0. They're equal in length. But these patterns tend to get extensions with Fibonacci ratios of 127 and 1618 most commonly. So actually about 60% of the time. So the 127 here, it would not be unusual. In fact, the odds favor that it comes down to this level. The 1618 is more of an extension where that rubber band really gets stretched. Here, we can see if we just follow this line over here, that 130 area is actually coming back in to this area here where some buying took place. So even if it breaks this trend line, it might be good for sort of a bounce up. Watch how it reacts around that trend line, if it's able to get back above it or not. So that's my view of Apple right now.
Yeah, I mean, if you hear that your main supplier has halted production, doesn't that sound kind of bad?
Not listening to news.
Yeah, I'm just trying to say, as a sidebar, though, you would think that if the supplier is stopping production of the iPhone, that's kind of a significant announcement, I think.
Yeah, I mean, that can certainly bring the prices down, but
Yeah.
I think a lot of, there's going to be a price area where people are willing to step in and buy it.
Oh, yeah.
So,
Yeah.
and I go with patterns and how price reacts around these patterns.
Do you do anything with the Elliott wave? Is this an A, B, and we're in a C wave to the downside, which could be a very powerful downside C?
This is a different, there is an ABC pattern in Elliott wave. However, I'm not an Elliott wave technician, but
No, I'm not either.
I do know Elliott wave. No, this is a pattern all on its own.
Okay.
The thing I would watch with this, Jim, you see the RSI, and we've talked about this before.
Oh,
The
yeah.
RSI is still bearish. So, a trader would need to have, I believe, some type of good bullish divergence on whatever type of oscillator, momentum indicator that they use. This RSI, it comes down, especially if it breaks below here, it's still going to be bearish. You might get a little bounce, but it's probably not ready for a big turnaround yet. So until this RSI turns back into a bullish range, let me show you an example here. So here we came down on the RSI, kind of went sideways, and then turned bullish on this run to the upside here. But it's been these highs back here. Look where the RSI was. I mean, that was a very bearish divergence.
Yeah, divergence, very much.
On that. So you want
now, where's the RSI? Is the RSI under 40? Because some people think when it gets under 40, that's when you get an acceleration to the downside.
You can get an acceleration to the downside, but the most important thing is that this range, starting from like back here, see the highs here, even on this rally, the RSI was not rallying with it until it can get above. I'll just drop it in so we can watch it on future shows as well and come back to this chart. So I'll just put that in there. So until the price and the RSI both turn bullish, probably just bounces off of these levels.
Mm-hmm. Yeah. Because like I say, you combine a weak looking chart with a fundamentally problematic situation, which is your supply. And it seems like, and then people do say the valuations are rather high. So these are things you don't watch, but I look at the entire picture, which means fundamental and technical. And obviously the technicals don't look very good. And now the fundamentals of high valuation and a halting of your supply chain sounds to me like that could be the recipe if you were going to get an acceleration that way.
Yeah, but with Apple, they're a very genius company.
Oh yeah.
And, so they could come out with some type of news that totally solve that problem
Right.
and excels,
I'm sure if you own it, you're hoping for that news. Huh?
Yeah, yes, yes, that's right. But Apple has not been, Apple topped out way back here. It was showing weakness way back in this area, even though it had this pop above this upper trend line. It just was showing weakness. We can see that clearly, with the RSI here. We can put on other momentum oscillators and we'll see the same thing. So I think the most important thing for me, what I'm watching, is that shift between, we're in a bearish range with Apple. So you've got to watch for a shift from bearish to bullish. It's not there yet. And I just put some Fibonacci retracements on from the lows over here to this high. We can see that a couple of them are sort of coinciding with that. But again, a break of this trend line, unless it holds this right here, this 127, we're right on that trend line at the 0.50,
right?
Then all bets might be off with this pattern, especially if you start to see long, wide-ranging bars down through here.
Yeah, the geopolitical thing, we've got Russia basically in a depression, and you've got China, their stocks. Things like BABA has gone from 300 and change to under 100. These two big powers have very little to lose right now, it seems like, because they've already lost quite a bit. So that makes the geopolitical situation a little bit dangerous because, economic problems generally bleed into political ones historically.
Yes. And, if we look at it, I don't remember, Jim, maybe you have the symbol for one of the Russian ETFs. I think
it was,
it's RVN or something like that. Let me see. Let me look at my R's. OPQR.
RUX, maybe? I'm not sure.
RSX.
RSX, yeah.
There it is. Okay,
Yeah,
so we can take a look at that. Look at this. That's just total.
Right, and that's a dangerous situation,
destruction.
like I say, politically, because geopolitically, because these guys obviously have nothing to lose, and then China, has also had a very big drop as well. So these two superpowers are definitely in a financial, quagmire, and that's not the kind of place you want them to be when they're thinking about military action, right?
That's right. Yeah, I think it's just bad globally for everybody at this point. Yeah.
I did want to ask, if it's okay with you, I'm going to pepper with you some questions that maybe the group should either be thinking or are thinking. Let's start talking about putting the S&P up there and look at since January, which is a small universe of time, but I'm going to bring it up anyway. After we had triple witching
from
January 21st.
Okay.
And then we had triple witching February 18th. And now we got triple witching on Friday, March 18th. Can you kind of highlight what the market did after triple witching?
Yes.
Which also, which means nothing to most people, but it also corresponds to a full moon. So you got a full moon and you got triple witching on right around those dates that I just mentioned. And let's take a look at what stocks did immediately after, because I noticed they had significant drops.
So we've got the January, this is a weekly chart. So I think actually seeing a weekly chart is a good way to view this right now. So I've got to back up just a little bit on this, if you don't mind.
Yeah, because like I say, that's not that clear to me on what happened. I was wondering if the yearly chart would be a little bit more precise as far as, look at the prices on January 17th to the 21st and what happened right after.
Okay, well, we can do that. Sure. Let me change.
And then the February, and then we can look at March and.
Okay, this, I want to point out this section right here. This section, you see a little X here, and then an A, that's a B, a C, and a D. This is called a butterfly reversal pattern.
Mhm.
And these tend to show up and form around major highs and lows as well. So this pattern already started to slide to the downside prior to the January 18th.
Right.
So
So it was starting to weaken going
it
into
was
it,
already
like
weakening.
we're doing now.
Yeah, like we're doing now. So here's
And then what happened?
I'm trying to find the 18th here. There's
Yeah.
the 18th right here.
Yeah.
Let me change that to a little sideways. We'll just point it right over. There we go. Okay, so January 18th. So we slid down from there, held some support right around this trend line, and then just retested where this broken trend line was. And it's all it did, and it came down and broke here again. So, I mean, let's look at the February.
February would be the 16th and 18th timeframe.
Okay, here's the 18th. It's right in here.
These aren't tiny little drops these last 2 months. huh?
No, they're not tiny little drops.
And like I say, we are pointing in the direction of,
Down.
yeah. So,
Yeah, this is the head and shoulders right here.
mhm.
This one here is the downsloping head and shoulders pattern. And then remember that the NASDAQ has already retraced to this level.
Mhm.
And you can see the S&P is a ways away. So I mean, I think it's a fair assumption to make that if we break that 4,100 low,
Yeah.
we'll
You
get
better
at
you
least
better
to
you
this,
better
at
get the
least to
raincoat.
this 382. And depending on the momentum
Mhm.
of a move to the downside, because we're talking about, taking out quite a bit of time.
Yeah.
All the way down here, we're going all the way back to 2021
Yeah.
profits in the market, and taking those out. So a lot of fear. I think the VIX is going to get above that 38 if we see this.
Yeah, I was
start to
going to say,
break.
I have 32 and 34 as pretty important points. We're trading just under that now. So if we were to take out 4,100 and take out 32, 34, and then 38, then the big kahuna drop could be in force. Huh?
Yeah, let's look at something on the VIX. Give me just a second. I like it. I like looking at it on this chart. Oh, not going back. Let me try one more so we can get a little perspective. Okay, so let me try a little bit more. All right, that's what I want. Okay, so we can see back here, going all the way back to 2009 on the VIX, that got up to like 88, I think it was. And then our 2020 drop got to 85, very just shy of that VIX high from 2009. So a move above this 38 and a half, which I think if we break that trend line, we're going to see the VIX exceed this, and then anywhere in that range between there and there, I don't think we're going to see, we've got to see a spike happen. We have not seen any kind of capitulation yet. I think that we've still been seeing the buy the dips mentality in this. And, there's a lot of people in the market that have never gone through any type of a real bear market. And so when that's a scenario for, for the psychology of the market participants to keep hanging on until the very last, very last drop.
Yeah.
And then they can't take it anymore. And then we see a reversal. I don't think it's there yet. I just think we're going to see how far it goes. Like in 2009, I couldn't have predicted it went as far as it did.
No.
I don't, there's only one or two people that I actually know that could have.
Well, you do listen,
weren't
in
talking.
09, you did have a real estate situation, which clearly was problematic. And then in 2020, we obviously had the COVID. And the only thing that you could think, well, not the only one thing you could think about causing further problem is, again, you've got China kind of closing down a lot. You've got Russia going nuts with the military. And then, a couple of things unwind a little bit, and then you could possibly, and you break the 4,100 level.
I think, I think that 4,100 level is key. We're not very far away from it right now.
No.
And if we look, look at this chart, we go back a little bit farther here, back to the 2007, 8, 9. This was an extremely severe, more than 50% on the SPX on that. And a lot of people don't believe that can happen. I'm not saying that will happen, but you have to always be prepared.
Yeah.
If you're invested in the markets, you have to be prepared for some type of,
some kind of a parabolic, or shall we?
Outlier,
the only
outlier
thing,
event.
one of the things that would make that occur is if something happens that makes the consumer obviously curtail his spending significantly, because again, at the end of the day, earnings were also very much affected by those events. And so right now, earnings really have not been affected yet. But if something occurs in the world to create a situation where the consumer puts his wallet away, then obviously, and that's one of the main things for the bulls, is that there is a lot of liquidity with the consumer that he can still go through during this rough patch. And there's a lot of truth to that.
Yes.
So that's why you never want to be one side. I think you feel the same way. You never want to be overly one way or over the other. But, if it starts to rain, you don't want to deny that it's raining.
That's good. I like the way you put that. Yeah, that's it. Yeah. Get an umbrella.
Yeah. And like I say, and then when circumstances and prices change, you just change with them. But, everyone is saying that the second half of the year is going to be this land of milk and honey, and it very well might. But to get to the land of milk and honey, you've got to go through those, you got to go through those small towns like 4,400 and 4,500. You know what I mean?
Yeah, I think that's an excellent analogy, and that's excellent. And I think that, for people listening to that may not have experienced all different types of market environments, our up markets like this are one type of environment, sideways markets like this are another, and then down and extreme down are another type of market environment. And so just always being, prepared for that. And there's different ways that people can protect what they have and be able to write it out with not a lot of pain. Yeah.
Right. Now, I was going to ask about 3 different areas real quick, and then we'll get into some of the stocks that you're looking at or whatever. But let's look at the TLT, because there's 3 things that seems to have occurred. 2 have occurred. One obviously might be occurring. One is interest rates definitely look like they hit their cyclical low in 2020. So let's start out with interest rates, because people are holding bonds now, and obviously they think they're safe investments. And obviously, if they're looking at their net asset values, they don't seem very safe. So let's take the TLT.
Yeah.
Do you think that the TLT, which is an inverse to, interest for interest rates, in other words, when this stuff goes down, that means rates are rising. When TLT goes up, that means rates are dropping. So if you were looking at TLT on more of a longer term basis, do you think there was a cyclical peak in TLT and that we're in a prevailing bear market in it right now?
Yeah, I mean, I can take here, I just have some old patterns on TLT because somebody never cleans up her charts.
Because with the inflation rates where they are, the Fed just was adding reserves last month. So, they have not even started to do whatever's going to go on. And I think extrapolating what they're going to do is silly.
Well, from a technical point, this is we're in a downtrend, or TLT is in a downtrend.
Right.
Everything from all the way back here in August 2020, this peaked back there, large gap to the downside. Here's a descending triangle, breaks to the downside. This is ABCD sell pattern. It just continued up to an extension. Here's our sideways range. This over here was actually a little butterfly sell pattern that was back in December 2021, and it's been declining since that pattern turned to the downside. Looking at the RSI again, talking about these ranges. Now, I think a lot of people use RSI as just an oscillator. I would say, so here you buy here because it's down below 30, and then you sell up here. But there's a much more effective way to use this, and it's not as an oscillator. It's in ranges. So right here, this rally here, that put the RSI into a bullish range for that period. But right here, where it crossed over, RSI is telling you right in here, it's going into a bearish range. And notice how well these peaks come back. This was support, and they act as resistance, just like price principles do. And so we can see that up here where this started to rally to the upside, just watching price. That might fool a lot of people, but the peak of this RSI was only at 65. And when you're in a bearish range and the RSI gets a rally, it's not likely to exceed 55 to 65. And so even this rally up, this peak was still in the bearish range. So until RSI and price are able, if price turns to the upside, then RSI has got to get above these peaks to be bullish again. Otherwise, it's just like a bear market rally, and it's going to fool a lot of people. And this is what I'm seeing on the S&P right now. There is nothing bullish on.
But as far as interest rates are concerned, I mean, it is starting to lose its legs. And, I mean, anybody who has a longer term history than the last 20 years knows that when inflation is at these kind of levels, quarter point hikes are kind of a joke.
I think again, focus on technicals. However, I think that, that the economy is sort of in between a rock and a hard place as far as the interest rates and inflation. And, connecting that to market participants again, most of these market participants have not gone through any high inflationary types of environments in the markets. So it's like I don't know, do we have some sort of a perfect storm brewing here?
That's what I'm trying to say. That, I would have some concerns about that, simply because the amount of debt that they issued with these extremely low interest rates, they are going down in price, and the yield these people are getting is not very much. So to cut to the chase, you're not getting much money off the income.
Yes.
Your principal is going south. And how long are bond investors going to tolerate that before they say, get me out of this thing that is, my principal is dropping more than the income I'm getting?
Right. And if their asset, are allocated to a mix of stocks and bonds right now, it's not protecting. I think that's the same thing that you're saying. They're not being protected. That's like the old classic way of doing allocations. And
you're getting whacked on both sides.
You're getting whacked on both sides. And
this chart doesn't give me any confidence that this thing is actually at a low point. It makes me feel a little bit like it's starting to accelerate to the downside.
Yeah. You want to take a look at the yield curve? I can pull that up real quick.
Well, that's been flattening.
Yeah. It's getting close to an inverted, being an inverted yield curve. Let me find, here we go. Let's see if I can find I
guess the thing that would bring the inflation down is a big drop in the stock market, because then people's wealth effect would be going out the window. And then if that slows the economy down, that would bring a lot of things back in line, but that doesn't come without pain, huh?
I don't think it's going to come without some pain. No. We've been historically in a very long bull run in the market. And you never know what a catalyst is going to be to end that.
Hmm.
And we may be looking at it right now. I don't know. I don't know. I'm just going to watch these price levels.
Yeah, that's
But
all
we
you can
can
do.
see here
Yeah.
that we're getting into, starting to almost turn down on the yield curve. And the last time we saw that was in 2009, 7, 8, 9.
So that's something. So anyway,
Yeah,
the
that's
interest
something to
rate
watch.
market, obviously, the bond market has been deteriorating. And as far as we can see right this second, there's no real evidence of that ending right now. Because the prices
Not yet.
the prices are not showing us anything that someone would say
Let's look.
this is as low as it's going.
Let's look and see on a little bit longer term here and see if we
Yeah, there
can
you go.
find something that always helps. Let me kind of refresh this so we can get.
Yeah. Because that's what you have to do when all the short-term stuff turns negative. The last ring to hold on to is the long-term graphs.
Yeah, that's right. You've got to see where those important areas are. So even looking at this on a weekly, let's look at the weekly, then we'll go out to a monthly. I always tend to do my analysis backwards. I know everybody's taught to do long to short, but I always do short to long. But here we can see back here in 2018, I'll just mark in some of these levels as we go. This was a big support area.
And the inflation was nowhere near what it is now.
No, we haven't seen inflation like this since the 70s, I think.
Well, like Volcker in the early 80s, yeah.
Yeah. And then, I mean, interest rates were, they were huge.
Well, I mean, they're huge. That's what I'm trying to say. We're looking at prices that are
even
really
if they went
moderate
to
compared to what they were.
That's still low.
And that still shows about a 13-point potential to the downside or 20-point potential to the downside.
Yeah, I
think
think
it started to accelerate,
Yeah. So even on this weekly chart, I mean, we can see here where this downtrend started way back, way back here.
That looks like a big peak, right?
Oh, definitely.
Yeah.
Yeah, definitely here. And then a retest of that peak, just about, a little more than halfway of that big long down candlestick,
right?
Which is to be expected. But it's coming through. We've got a little gap here breaking these lows here. I would expect this to, be getting down closer. Here's a little area right here too, before it gets any bounce. You see this right here? Right here, this was an inverse head and shoulder pattern. So that's a bullish reversal pattern. I'll put a little circle so everybody can kind of see what I'm looking at. This little area right here, left shoulder, right head, and right shoulder breakout retest. So it looks like, let me see if I can find something let's do a little bit. Okay. So I'm putting on some extensions, Fibonacci extension ratios on here. This 127 is coming back into where, after it retested this little breakout area to the upside. So this could well be a place where it finds some support. If it comes a little lower, probably around this 1618. Breaking below here would be super negative, but it looks to me like that might be where it starts to find some support. So we'll watch that area. We can come back to this chart in the future too and take a look.
Absolutely.
I'll keep the lines on here. But again, this RSI, look at, from what I explained on the RSI, this is a very bearish RSI. This is a bullish RSI over here. See how this held right here, how when you have this little movement, little retracement, little A, B, C, D bi-pattern retracement right here. Notice how the RSI held, that actually held at about 47-ish, 48. That's very bullish. Bounced back up to the upside, divergence on the RSI, and then this down move. And then you can see how once the RSI broke, these lows right here, we can match that up with the vertical cursor to the price. That's bearish. That's just bearish, bearish, bearish. Now, when the price gets down to this level, if it gets down to this level, I should say, and retest this area, we're going to want to recheck this RSI on a couple of time frames to see if it's showing us some signs of bullishness with it. And but this is the area. These are the areas right in here I would be looking for.
Yeah. Let's turn to commodities. Just if you could put up GDH, which is the Goldman Sachs commodity index.
Let me see if
And
I
then we
have
can
that.
look at the three major components, which is oil, grain, and metals.
Okay, hang on just a sec. Let me just put
Because
GDH
it seems
in
to me
real quick.
that we are going to make a top here this year. And that wouldn't be too shocking because the prices have gone through the roof, and going through the roof is maybe not sustainable, you know. Kind of like Zoom, you know. $500 wasn't sustainable.
Let me put it on this chart. It's GDH. Is that the right symbol?
I believe
It's not
that's the
coming up.
symbol. Okay.
Goldman Sachs. Let's see what comes up.
Yeah, if you write Goldman Sachs commodity index. Goldman Sachs physical commodity index. See if they have it. Physical global income. No. Commodity index. Well, I'll tell you what it says. The high in 2008 was about 900. We hit about 850. So it kind of tested that area, and now it's in the 700s. So let's just look at the three main components and get an idea if maybe commodities have topped. Let's put up crude oil.
Okay, yeah, hang on just a sec. I'll just use this.
Because, you know, there's a lot of people in energy stocks. There's a lot of people in metal stocks. There's a lot of people in, you know, maybe agricultural companies like ADM and Mosaic and people like that. So, you know, if these things have hit a high point, you know, it would be nice to talk about that. Yeah.
Yeah, let me go back here and get it off of my charts. Here it is. There's crude right here, continuous contract. Yeah. Again, let me put this onto a weekly, get a little bit better viewpoint of this. Actually, I think I'm going to have to go to a monthly.
Yeah, if you go to monthly, it'll include 08. So you can
There
see 146 was the high there, and we kind of went up to this 130 something. And
yeah, this is something on my website that we have been following. And so let me show you something here. Okay, so this fib ratio right here, 0.886, this is what I call the last chance fib ratio. And it's not one that a lot of people use. They use the 382, 50, 618, and 786, and then they go to, you know, the 1.0, the entire length of the move. But this little 886 in here, this one I call the last chance because many times in a strong move, the retracement will get to that 886 and halt the price movement. Now, here's a general rule of thumb to use with it. If price is able to come back up here and get a close above this 886, then you're probably going to see, you know, that 1.0, and then oftentimes that's exceeded. So if it's exceeded, this 127 up here, that 185 is likely where the price will go. However, you know, right now, well, this is actually, it'd be a great setup for it because, you know, we're seeing a lot of steam come out from here, from hitting there to here, coming down. And, you know, the local news stations, everybody was talking about crude oil, price of gas, going up right here, and boom, hits the 886. And now we're getting a correction. However, with candlestick theory, you need a close below here. We're on a monthly chart right now to have more downside. Candles don't do any type of price prediction. They just tell you that it's supposed to move further than that. But a reverse signal with a candle like this is price getting above this point because so much selling came in here that would be taking a lot of market participants by surprise. And then we could put our 886 last chance fib ratio theory into effect, close above here, expect at least here, and very likely up higher. So I think we're probably going to see some testing, you know, down into these areas is testing that 100. I think if it dips below there, probably good for a bounce. But I think it's going to be a while before we would see prices exceed that. I don't think that's something that's going to happen right away.
Yeah, you would need some type of an additional event, and that additional event would have to be fairly horrific. That would blow out the 130 and open the door for
Yes.
150 to 200 that people are talking about.
Yes, yeah, but that's the first time that this price has tested, got just about halfway of this candle here from 2000, 2008. It's the first time it's been up there in a long time.
Right.
Long
And so
time.
the energy stocks you own, you'd want to be a little bit monitoring them because they've
Yes.
had huge runs. And again, if we're not going to go above the 131, and if we are going to be more 80 to 100, that may have an effect on those, right?
Yeah, it could very well just sort of end up going into a big range right now because it's had such a momentum move to the upside that it's going to want to find a home somewhere in these price levels.
How about the price of soybeans? That's the grain
soybeans
indicator.
Okay.
And so there's it's not a far-fetched idea that we could be seeing a high point, huh?
Oh, let's see. Okay, I might have to go to a different chart here. These soybeans are not.
Yeah, if you go to the monthly, it'll give you a long-term perspective.
Yeah, I think some of my my symbols on that particular chart have changed and I haven't updated them. So let me go back over here and I can find them here. Soybeans. And we go to a monthly. It's kind of almost similar in a way to crude, retesting these highs back here, 2013. Let me see if I can put this is not as intuitive for doing retracements, but I can do retracing because I want to see where that 886 is.
Both the oil and the beans are extremely far away from their averages. So a concept of reversion back to the mean is certainly something to start looking at, right?
Oh, they don't have the 886. Well, yeah, but sometimes reversion to the mean, it depends on, like, for instance, we can see crude oil maybe beginning a reversion to the mean. Soybeans, it's going to have to get under, probably this close where this bar is. If it gets below there, closes below there, it'll probably start coming back towards these moving averages. But sometimes you can get something very, 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 very far away from where the mean is before you see any reversion.
Or it could take quite a bit of time.
Yes, absolutely.
Well, let's put up a Mosaic, MOS, and Archer Daniels Midland, ADM, because those are both in the agricultural business. And of course, they've gone through the roof. And so what do those stocks look like?
They look like they're correcting back down at first glance here. A lot of strength up here. RSI did not really have a divergence at the highs, but it's just turning back down in a corrective mode. This may end up doing an ABCD buy pattern. You have A, a B, your C and D legs are going to be just about equal, maybe a bit of an extension. Maybe back around to that 47, 48 level. But it looks like they're just doing a, corrective move right now.
And what about ADM? That's another one that went from like 20 to 80 or something like that. Or 40 to 80, something like that.
Same thing. Looks like the same type of chart pattern. Looks like it's going to do a, possible A, B, C, D buy pattern on here. It's been a nice strong move to the upside. So yeah, it doesn't, this still looks like there's strength in it.
Yeah. Oh, of course.
Yeah. If the RSI breaks below, like these lows, breaks below 50, and 40, then I would change my mind.
Certain type of defensive hedging techniques might at least be worth an investigation up here.
I would think so. Yeah, I would think so.
Let's take a look at a gold, what gold prices, and then Newmont Mining, which was the real leader. Something.
Do you want to look at GLD?
Yeah, well, let's look at GLD.
Or you want to look at NEM right away, or?
Well, we'll look at gold itself. And
okay.
Then,
Well, let's see, I'll just use the GLD because I just happen to have it right here.
Right. It's pretty similar to the
Yeah.
spot price.
So they had a, extended range, breakout of the range, and now, it hasn't gotten above these highs, but, a test back down towards, towards these levels would.
Hello? Hey, David?
Hey, yeah. Can you hear me?
I can hear you. I
Okay.
can't hear Leslie.
Leslie, are you there? I think she might have
You got cut off, you think?
got cut off. Yeah.
All right. Well, we're coming to the top of the hour. I guess basically, what I would like to do is we're going to have Leslie's information put up because she has a number of educational courses that help people. And we're going to give the information on how to get a hold of her and how to get information on the different courses she provides. What we were trying to basically show is that, the gold prices have had a very large run and they may be backing off a little bit. And the same thing with Newmont Mining, had a very big run. It's backing off a little bit. And further analysis on it right now might be worthwhile, particularly if you've been long the stock for a long time, looking at ways to protect yourself against, deterioration from the gains that you've had, using maybe a replacement trade or something like that. At the optionprofessor.com, we do have information on hedging, not only the downside, as we're seeing in many stocks, but also upside surprises. So there's a couple of different ways with replacement trades to kind of protect against upside surprises that can get you when things are very negative, and then all of a sudden news happens, but also to protect the portfolio as it's going to be under pressure in a downtrend. So that's a PDF report we have on hedging at optionprofessor.com. As far as Leslie's information is concerned, David, do you have her email address that you can put up there now?
Yeah, well, her website is tradingliveonline.com.
Okay. And when you go to that website, she'll have a number of courses for not only beginners, but even intermediate and advanced traders that you can take a look. And there she is. So you have your trading courses, your weekly market situation setups. And, she has been doing this since 2007. So she's got extensive experience doing this and be very helpful for people who want to educate themselves further. So she brings a lot to the table. You guys should go over to her website and check out her stuff. And again, as far as Option Professor is concerned, we are trying to put PDF reports out that are helpful for investors, education. And again, the main one we're looking at now to make sure people get, because we think it's very important to be educated on hedging. And not only downside, but sometimes we get out of stocks and then they're going to go right through the roof after you get in. Well, there's a way of hedging against that risk of being out once it reverses on you. And then, of course, on the downside, there are uses of collars and married puts and other tactics that can be used to protect against downside moves as well, that are very helpful. So again, do get a hold of Leslie's information at the website you see on your screen. And then go over to optionprofessor.com and get information that we have on hedging, among other things as well. As far as the markets are concerned, 3 things to keep an eye on this week is you got your Fed meeting.
Leslie, are you back?
Are you back, Leslie?
I'm back. I got
okay,
out.
Great. Yeah, I was just saying we've got some things coming up on Wednesday with the Fed, and also triple witching Friday to keep an eye on, and then keep an eye if the volatility spiking could be happening after options expiration. But did you want to go over what you have on your website here?
Sure. Yeah, again, Trading Live Online is my website, and it is here for the sole purpose of helping educate traders. I've got different, training programs, anything from self-study to working with me one-on-one. So, please feel free to just, you can send me an email if you like, if you have any questions on anything. I'm always happy to answer any emails that I get.
And a lot of trading has things to do with psychology. And I think you address that aspect quite a bit, don't you?
I do. I think that that we trade our mindset. That's what I believe most people do. And so if traders are struggling with their trading, they probably don't have a trading plan that is working well with their mindset. And it might be either something very simple, like just making a couple of little adjustments and realizing what and where that is, or it might be something a little bit more, like you really need to develop a trading plan. If you don't have a trading plan, you don't have anything to gauge either your actual results or how your mindset and emotions are working with that. So I'm here to help with that. So feel
Yeah,
free to contact
you
me.
can help them get a discipline, because without discipline, you're like a feather in the wind blowing whatever it blows.
Yeah, I call it a hamster in a hamster in a hamster cage going around and around on that wheel. You make a couple steps forward and 3 steps back, but you have no idea how you even got the steps forward or back.
Right.
So I help you to identify and to put you on a path that you have the skills to identify when you're on track and you're not on track.
Well, I think we both can agree that it's been a fairly treacherous beginning to the year, and that the volatility may not be going away anytime soon. So educating yourself now is probably not a bad idea.
Yeah, if you can learn to trade in these markets,
Right.
this is sort of like I like to ski. And if you can learn to ski on like icy, cruddy conditions, like we get up in the Pacific Northwest where I live, then when you get into powder skiing, it's
It's a piece of cake.
it's a piece of cake.
Yeah.
Yeah. So you want to
All right,
learn
Leslie.
all environments.
Yeah, I really appreciate you being here. We always have a great time. So let's do this again, of course.
Yes, thank you.
Okay. And again, David, I'm going to turn it back to you. And thanks everybody for being here today. And I hope we added some information that's useful to you as well. So again, David, back to you.
Yeah, great show today. So just a quick reminder for everyone, be sure to subscribe to Timing Research on YouTube and your favorite podcast app. Also, you can just go to TimingResearch.com to get access to this recording as soon as I can get it posted. Also, if you did not see this last week, we had an excellent 3-day event, the 4th annual Women Teach Trading and Investing, and Leslie was a presenter on that. So be sure to check out those archives if you haven't seen them yet. They're available right on TimingResearch.com as well. And so just want to thank my guests again for today, Leslie Jouflas of tradingliveonline.com and the Option Professor of optionprofessor.com. Thanks, everyone.
Thank you. Have a great week, everyone.